In a move that has sent shockwaves across the global tech landscape, NVIDIA has announced it will resume selling its H20 AI chips to China. This decision reverses a ban put in place just months ago and marks a significant pivot in the ongoing tech rivalry between the US and China. For months, the US government has been tightening restrictions on China's access to high-end American technology, particularly the advanced semiconductor chips that power the current AI revolution. Citing national security concerns, Washington has put a stop to the sale of NVIDIA's top-tier AI accelerators to Chinese companies. In response, NVIDIA did what every savvy company does. They adapted and began developing a series of less powerful, export-compliant chips specifically for the Chinese market, and the H20 was the most powerful of this lineup. But in a surprising move back in April, the US government blocked the sale of the H20 as well, leaving NVIDIA with a significant hole in its revenue and Chinese tech firms scrambling for alternatives. Fast forward to this week, and in a dramatic reversal, NVIDIA CEO Jensen Huang announced that the company will be given the green light from the US government to resume H20 sales to China. Now keep in mind, this news came from NVIDIA's CEO and not the US government, so take this news with a grain of salt until we have an official confirmation from the administration. So you may be asking, why the policy pivot? Well, reports suggest a combination of intense lobbying from NVIDIA and other tech giants who argue that the ban was not only hurting American businesses but also inadvertently bolstering Chinese competitors like Huawei. There are also whispers of this being part of a broader trade negotiation between the two superpowers. Now let's talk about the H20. It is crucial to understand that this isn't NVIDIA's top-of-the-line processor. It is a deliberately pared-down version of its more powerful sibling, the H100. It offers significantly less computational power and has restricted networking capabilities to prevent it from being used in massive interconnected supercomputers for large-scale AI training. With that being said, it is still a highly capable chip for many AI tasks, especially what is known as inference, which is the process of running already trained AI models. However, some US lawmakers have voiced concerns that any advanced AI technology sold to China could ultimately be used for military purposes, regardless of its initial intended use. This will undoubtedly remain a point of contention and a delicate balancing act for policymakers. Now let's take a look at where NVIDIA stock stands after this news. All of the data I will be referencing is coming from Yahoo Finance as of July 18th, 2025. As you can see, there was a big spike following the release of this news. The stock jumped from around $164 to $171 a share, which gives us an increase of around 4.5%. Not bad. As you can see here, the stock is currently sitting at around $172 per share. Something worth noting, as you can see here on July 15th, analyst Oppenheimer maintained its outperform rating and raised its price target from $175 to $200. Now looking at its PE ratio, it's currently standing at around 55 times earnings. This is the premium people are willing to pay for the stock for each dollar of earnings the company generates per share. So a higher PE ratio means a higher premium. Higher PE ratios can be a signal of high growth expectations or overvaluation, and low PE ratios can suggest limited growth expectations or undervaluation. Now let's compare NVIDIA's stock profile to one of its competitors, AMD. Looking at their PE ratios, here we have NVIDIA again sitting at that 55 times, while AMD is sitting at around 113 times earnings. Now, I don't want to speculate the significance of these numbers too much, so make of that what you will. Currently, the market cap of NVIDIA is roughly $4.2 trillion, and AMD around $255 billion, meaning NVIDIA's market cap valuation is around 16 times more than its competitor. But the real question is, does it have 16 times the detail? But with the lower PE ratio, it would seem that NVIDIA is more fairly valued relative to its earnings, even with its absolutely enormous market cap. As of today, NVIDIA has the largest market cap of any company in the world. Now let's break down the price performance of the two stocks. If we look at the past year, NVIDIA has delivered a solid 42% return. AMD, on the other hand, only saw a 1% return. Not great. But looking at year to date, AMD actually has the edge with a 30% gain, just ahead of NVIDIA's 28%. In the last 3 months, AMD has surged 80%, while NVIDIA has grown by almost 70%. And finally, over the past week, AMD has still shown impressive momentum with a 7.6% gain, outpacing NVIDIA's respectable 4.5% gain, which largely has come from this breaking news. Now, keep in mind, I am not a financial advisor, and this video is for informational and educational purposes only. Make sure to always consult with a certified financial advisor before making any finance decisions. Past performance does not equal future performance, and investments can lose value. So what do you guys think? Let me know down in the comments which company you think is a better investment moving forward. Thank you for watching, and I'll see you next time. Peace.